HYLD, the Hamilton Enhanced US Covered Call ETF. Going on to the Hamilton ETF website, you can already see the high yield of this fund broadcasted at 12.19%. This ETF invests in blue chip US companies and also has 25% leverage. So before we dive into this fund, I want to do a little lesson on fees. Scrolling down to the fund details, you can see, however, the management fees are 0%. This is very misleading because the industry standard is the MER, the management expense ratio. So we're going to have to look at the fun fact. So looking at the fun fact that was made on January 9th, 2025, you can see the MER was 2.37%. Getting down to the fourth page, you can see Hamilton waived some of the ETF's expenses. So if they hadn't done so, the MER would have been higher. So don't worry guys, they're only buying C-Rays for their summer homes, not Donzies. Covered call ETF providers also love to hide fees in the trading expense ratio. Most mutual funds and ETFs don't have this, but this one has 0.07%. This brings the ETF's total expenses at 2.44%. So make sure to go to the final page of the fun facts because you're going to pay $24,400 in annual fees with $1 million portfolio. That's more expensive than talking to an advisor at a bank. So HYLD was made back in 2022. There are over $1 billion in assets under management. It's a fairly active fund with 285,000 shares traded each day. You're going to get the price you want with a bid-ask spread of 0.1%. There are 9 holdings, but this is a fund to fund, so this is fine. There's no beta because this fund isn't 5 years old yet. This is a fairly active fund with a 60% turnover rate. The trailing 12-month yield is 11.87%, which is a little different than the website. And you're going to get these distributions monthly. HYLD has a PE ratio of 23.29, a price to book at 4.59, price to sales at 4.04, price to cash flow at 17.16, and a 3-year Sharpe ratio at 1.36. So let's rebuild HYLD to make sure it's doing all right. We're going to use the same asset allocation, but not use any leverage. We're going to use ZUQ for our American, TEC for our tech, ZBK for US financials, ZHU for healthcare, ZGD for the gold, ZEO for energy, and RIT for REITs. And we're also going to test out using all that yield. So with $1 million portfolio, you can create $9,891.67 of monthly passive income. So I also wanted to compare what if you just invest in the S&P 500. So I put VFE in the portfolio as well. So withdrawing passive income since March of 2022, HYLD had the least amount at $797,000. The portfolio I just built for you has more than what we started with over 1.1 million, and VFE just trailed right behind with just over 1.1 million. HYLD had the worst returns, the highest standard deviation, the worst best year, the worst year, the highest max drawdown, and it has the worst Sharpe ratio. You couldn't pay me to promote this fund.